Coming up on Business Incorporated, IMF revises South Africa's growth forecast down for 2021. And the UN says acute hunger grips millions in West and Central Africa. African startup inflows hitting record $5 billion this year. Hello and welcome to the program. I'm Ladi Williams. Well, it's 1 p.m. right here in Lagos, Nigeria. Let's take a look at how the markets performed that intraday. Starting off with trading activities on the African continent, it was more of mixed sentiment at intraday. Nigeria's NGX still in negative territory, but this time with a higher margin there. It's down about 2.08%. Stockbroker we spoke to earlier said Dangote Cement was down about 10% in early trade. Could be the reason for this massive margin at intraday. Well, South Africa's index was also in the red, down 0.31%. Egypt's EGX 30 was in the green, up almost 0.5%. And the Nairobi Stock Exchange closed Wednesday's session in positive territory, up 0.91%. We'll cross over to the Middle East, where major equities were mixed that intraday. The Abu Dhabi index was down 0.57% after a negative move yesterday. Meanwhile, Dubai's index still maintaining positive sentiment, up almost 1%. Still within the region, Saudi Arabia and Qatar were on different sides, with Saudi down over 0.5%, while the Qatari index up 0.08%. And European stocks traded cautiously positive in the morning as investors continue to monitor developments around the Omicron COVID variant and look ahead to key U.S. data. Meanwhile, with a new government on the job in Berlin, investors are back focusing on a whole pile of economic indicators. For more now, let's bring in Chris Koba right there in Berlin. Great to have you, Chris. Well, Germany Statistics Office published fresh figures on the country's trade balance. What did they tell us?
Well, German exporters are back in business, and that is despite continued problems in the global supply chain. Exports in October are up by more than 4% compared to the month before, after they had been dropping in September and August. Overall, goods worth around $136 billion were exported, which is about 8% more than in October of last year. The total value of imports was up 17% compared to the year before. Overall trade has also been higher than in February of 2020, when the coronavirus pandemic really started biting into business. Now, one reason behind the increase were better sales of German car makers, and they really had some catching up to do, and still have, for that matter. And there are analysts who say that the data is pointing towards disruptions in the supply chain easing somewhat, and a rebound in manufacturing would come just at the right time for the German economy to offset some declining sales in retail and the hospitality sector, as the German government is tightening pandemic restrictions again. In general, economists are saying that thanks to full order books, German companies can be right back at producing at full capacity once the necessary parts are there. Some of the issues in the supply chain may have been resolved, but the overall dry spell isn't over yet.
Right, and Germany's benchmark 10-year yield is falling to its lowest level in almost about 3 months. Why is this, Chris?
Well, this came after worrying news from the UK, where the government announced the reintroduction of tougher COVID-19 restrictions in England, ordering people to work from home, wear masks in public places, and use vaccine passes. Now, the news interrupted an upbeat tone in broader markets that has seen investors focus on signs that the new Omicron variant may be potentially less severe than previously thought. Bond markets, however, had continued to strike a cautious tone, and indeed the news pushed German 10-year yields to their lowest level since September. Now, they've rebounded somewhat after BioNTech and Pfizer said a booster of their vaccine had been effective against the Omicron variant in a lab test. It's the same news that has given stocks overall a boost. However, concerns remain, some analysts saying that the vaccine news would only eliminate the worst case scenario of a full lockdown, whereas a lockdown light would still be very much likely, particularly after increased personal meetings during the holidays. Now, focus remains on the European Central Bank as well, ahead of a potentially crucial meeting next week, where the ECB is expected to set policy for a relatively short-term period of time, given heightened uncertainty. Now, inflation in the Eurozone is certainly a topic. It will take longer to fall back to target than earlier thought, but so far there is no evidence that high prices are becoming embedded in wages, ECB Vice President Luis de Guindos said. Another indicator of how inflation is faring currently will be published tomorrow with an update on German consumer prices.
And Made in Germany has been a popular, trustworthy trademark for decades, helping companies to sell their products around the world. But apparently the label's reputation is wearing off. Tell us more about this.
Well, banking on the success of this well-established label simply isn't enough anymore. A recent study of consultancy firm McKinsey and German advertisement agency Jung von Matt says less pricey and more innovative products made in the United States or Asian countries are increasing the pressure, especially for companies in industrial manufacturing, which is a backbone of the German economy, of course, and they're particularly medium-sized companies selling to corporate customers are doing too little to establish their own brand. According to the study, around half of the companies polled are discussing brand issues only once a year on an executive level and spend only around 2% of their budget to develop their brand. And that's despite McKinsey studies showing that companies focusing on appearance and perception can raise their profit by up to 21%. In a competition that's been increased by the coronavirus pandemic, a strong brand can pay off on many levels. It can help position a company as an attractive employer, its investment in the future as it helps build trust in upcoming products, and it can help sales as customers tend to choose a product of a strong brand. Now, the makers of the study say drawing the right conclusions is easier for companies that are selling to private customers as well, as marketing there is more common. Now, if you have a strong field of competitors, getting people to buy your washing machine has been more challenging than getting them to buy your welding robot.
All right, that's Chris Koba right there in Berlin. Thank you so much, Chris. Well, in the UK, hospitality businesses are urging the government to provide fresh emergency financial support as England moves to COVID Plan B amid fears of an exponential rise in the Omicron variant. For this and more now, let's bring in Juliana right there in the UK. Great to have you, Juliana. Well, the COVID Plan B announcement seems to be, rattling some businesses, particularly those in the hospitality sector. They say many firms risk running out of cash and collapsing if they miss out on the crucial boost from Christmas trading. Is the government ready to give out, more fresh emergency financial support?
Good afternoon, Lenny. We don't know yet, so we haven't heard from the Treasury about whether a furlough is likely to be revisited or whether or not there will be any sort of financial government support scheme, but certainly the hospitality sector needs it. They were obviously reeling for almost 2 years because of these COVID restrictions, and once again, at the very last minute, it seems as if we're going backwards. I think as part of the Plan B measures which were outlined yesterday in a televised address by Prime Minister Boris Johnson. I think the most stinging measure has got to be from Monday, when millions of workers will be asked to work from home. This is going to have massive ripple effects. There's just some information that I've retrieved from the Centre for Economic and Business Research. They believe that this is going to cost the hospitality sector in just 5 of the big UK cities, £500 million a week. There was another economist that expects it to cost about £4 billion a month. And even if there is going to be some government support payments, you know, this has got to be paid back by the taxpayer. I think one of the most shocking parts of Chancellor Rishi Sunak's recent budget was the fact that national insurance is going to be raised, corporate tax is going to be raised, there's a squeeze on the amount of universal credit that's going to be given to the people who are less privileged in the UK. And, you know, the fact that more government support is going to be doled out in the coming weeks does mean, you know, that this money does have to be back. So there are certainly large outcries, I think, all across the hospitality sector. And again, that's down to what they consider mixed messaging. In yesterday's address, the Prime Minister said, you know, that Christmas parties are still on. You know, you can still go to your child's school and watch a nativity play, but if you can do that, why can't you go to work? You know, that's a major concern, particularly, you know, for our viewers in the UK. You would have seen that a lot of these stores have doled in extra staff. It's been difficult for them to get staff. It has been busy on these streets, and now that people are going to be working home, who is going to be having the coffee in the morning? Who's going to be going out to have lunch at lunchtime? These are major concerns that we're going to have to hear from the government. There has been talks of some sort of a Tory revolt, and lots of backbenchers very, very unhappy with the government at the moment, because, of course, they're getting it in the ear from their constituents at home who have already struggled so much over the past couple of weeks. Is this going to pass in the House of Commons? I think a vote has been put in place early next week, but there could be a significant, severe backlash from Boris Johnson's own Conservative Party. Lots of calls for a vote of confidence, which could inevitably lead to him being kicked out of office.
Wow, really interesting times there. Well, we'll keep tracking to see how that plays out. But I'm sure the markets are reacting already. We see hospitality and travel shares dropped on the news of the COVID-19 Plan B. You know, with the pound nearing one-year lows as restrictions, you know, cloud the outlook. You know, bring us up to speed with intraday numbers right now.
Well, yeah, the FTSE was doing pretty well, wasn't it, this week? All those gains have been lost, completely slashed with these new measures that were put in place last night. As to be expected, all of the usual suspects are down, including the big oil giants, Royal Dutch Shell, BP. They're all trading down. At intraday, JD Wetherspoon's really popular pub group, their shares are down by about 2.3%. All of the airlines are down. International Airlines, owner of BA, they're down 2.65%. Wizz Air, EasyJet, they're all down by more than 2%. We're also seeing shares down in Cineworld. Cineworld, really popular cinema chain here in the UK. New plans now that when you're watching your movie, you're going to have to wear your face mask. I don't know how people are going to be getting their popcorn in the back of their throat. I think that's why their shares are down by about 3%, and the list goes on. To have a closer look at the numbers, the all shares down 0.08%. The FTSE 100, that's down by 0.07%, and the domestic market is down by 0.17%. In the currencies market, as you were saying, the British pound is currently trading down against the US dollar by 0.16%, though it's slightly up against the euro by 0.14%, but down against the Japanese yen by 0.29%, Laddie.
Yeah, we've got to get that popcorn in somehow. Well, what would this whole COVID Plan B mean for Christmas in the UK?
Goodness, I'll have to bring out my crystal ball from underneath my desk.
Yes.
I don't have a crystal ball. So the answer is, I don't know. We don't know as of yet. And what we do know is that the Prime Minister and his wife, Carrie Simons Johnson, they've just had a baby girl. You know, Prime Minister Boris Johnson, the populist man he is never out of the news. So on the one hand, he's getting congratulatory messages. This is their second child. We believe it's the Prime Minister's seventh. Although I say seventh, some say 10th. We don't know for sure. Yeah, so a little bit of a relief for the Prime Minister for at least the next couple of hours. But again, as I was saying, there are lots of mixed messages. You know, the Prime Minister at a time where GDP is just getting back to those pre-COVID numbers has ultimately decided to lock down the economy for a variant which, as we're hearing, isn't as deadly as the Delta variant. There are yet no deaths of Omicron in the United Kingdom, and we don't believe as of yet there are any hospitalizations. So lots of people think this is going far too far. How can you dare ask people to attend a Christmas party and not ask them to, you know, attend their office? You know, it's a huge political scandal here in the UK at the moment. So as of yet, it does appear as if, apart from the Plan A and Plan B measures, which means increased mask wearing, which includes, you know, using a vaccination passport, which has its controversies, of course, and the working from home, Christmas does seem to be on. So you can gather with your family members as of today, right this second.
All right, Christmas still on. All right, Juliana, thank you so much. Enjoy the rest of your day.
Thank you.
All right, after the break now, we look at the commodities markets. That's in a moment. Do stay with us. Welcome back. All right, on commodities markets update, we're looking at maize as an important raw material for ethanol production. Global demand for industrial ethanol has been growing by leaps and bounds. For example, ethanol demand has spiked from 13.12 billion gallons to 26.1 billion gallons in the past decade, an increase of about 121%. And Nigeria's local output of maize is approximately 10 million tons. How the surge in demand for ethanol impact Nigeria's maize market? Let's bring in Sheyi Omidiora now, analyst, financial derivatives company. Great to have you, Sheyi.
Good afternoon. Thank you for having me again today, Ladi.
Yeah, so we're seeing a surge in ethanol demand. Do you think this surge would have any impact on the dynamics of the maize market in Nigeria?
Well, normally it should, but then there might be some local mitigating factors against that. The primary one being the fact that maize production in Nigeria is not particularly organized, and neither is any agricultural produce or production at all. And in a space where production is not particularly central, and where we still have infrastructural problems, then of course, in terms of, might not necessarily translate to an increase in production or an increase in supply for maize in the coming years, even though demand for ethanol is expected to spike, especially with the transition towards cleaner renewable energy.
All right, and the price of maize has increased sharply, about 73% in 2021. This is in comparison to official food inflation, which is about 18.34%. Can you explain why there's such a wide variation between, increase in the price of maize and the official food inflation?
Okay, yes. The first port of call is we should look at what the prices of maize, the price of maize has been internationally, and currently it's trading at about $590 per bushel compared to about $485 per bushel it was at this point last year. It has gradually increased from $485 per bushel. And this is about a 25% increase. So And seeing as Nigeria still currently imports some of its maize because we are incapable of meeting our local demand, we still import about between 2 and 4 million tons on an annual basis. Some of that import, of course, because of the price increase and of course the currency depreciation, it would have fed into some of that price increase. Another thing we also need to consider is the fact that maize, some of the areas where maize is grown, the north and north central basin has been largely exposed to social unrest. And this, of course, has prevented farmers from going to their farms. And this consequently has had an effect on supply and production. And all of these things, increase in prices, currency depreciation, a decrease in production levels will definitely lead to an increase in maize prices. So this is definitely not a surprise that maize has increased in price from where it was last year to where it currently is this year.
And you see, Kenya imposed restrictions in maize importation from Tanzania and Uganda because of the levels of mycotoxins in the maize from both countries. They were above, the safety limits. And, research has shown that these compounds, are carcinogenic and can cause damage to animal and human DNA. What quality control procedures, should be implemented to ensure that maize production and importation is within safety limits in Nigeria?
Yes, for starters, we need to know exactly what mycotoxins are. They are naturally occurring infections that are largely produced by fungi or bacteria. Now, these are incredibly harmful for human consumption and even animal consumption. And even the World Health Organization has limits and have put out materials on a constant basis on how harmful consumption of these of grains that have mycotoxins are. Now, in terms of exactly how to combat or to implementation or things we need to implement in order to be able to reduce or better the quality of maize, the first things we need to look at is where we are importing from. We need to ensure that the maize we are importing from other places are way below the threshold that the World Health Organization has set. That's one thing we need to do. Another thing we also need to do is basically maybe improve the quality of seedlings that we produce in Nigeria. The kinds of seedlings that we currently produce are low yielding, which is one thing. Another thing is they are highly susceptible to some of these mycotoxins. So having investment in R&D where we can actually improve the quality of seedlings that we have in Nigeria is another thing. Also, things like storage infrastructure, there needs to be loads of investment in that as well. So these are some of the things we need to implement and we need to look at in order to improve the quality of maize we have, so as to reduce, have things in place to reduce the quantity of mycotoxins in maize.
Right. All right, Shea Omid, financial analyst at Financial Derivatives Company. Thank you so much. Always good to have you.
Thank you very much, Ladi.
All right, moving on. Now, the International Monetary Fund has revised downwards South Africa's growth forecast for 2021 as economic indicators have worsened further on additional COVID-19 outbreaks and deteriorating public finances. The IMF on Wednesday has estimated an output rebound of about 4.6% for 2021, down from the 5% projection it made in October. The lender said South Africa's recovery from last year's record 6.4% contraction had not decreased the unemployment rate amid deteriorating confidence, anemic private sector investment and weak credit extension. As a result, the IMF also projected a lackluster medium-term outlook, with growth averaging 1.4% per annum, inflation returning to the midpoint of the 3 to 6% target range, and the external current account reverting to its structural deficit. At the end of its article consultation with the government of South Africa, IMF urged the government to immediately tackle structural rigidities that were depressing private investment and hindering inclusive growth and job creation. And fundraising by African startups is set to reach $5 billion in 2021, a higher amount than the figure raised in the previous 3 years combined. According to a forecast by a London-based company that tracks investment into African startups, Britta Bridges Intelligence. The director of the company says a few more deals before the end of the year will increase inflows from about $4.8 billion currently. The jump partly reflects greater interest in Africa from investors in the U.S. and China, as well as institutional bankers. Increased inflows, partly due to investor interest in financial technology businesses in Africa, helped deliver at least 4 of the unicorns, companies that are worth more than $1 billion in Africa this year. They include Andela, Flutterwave, and Opane. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.